Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 22nd of July, 2023. And it's the weekly technical analysis for spot gold and dollar yen for the 4th week of July. And for both these pairs, the spot gold has hit the resistance and started to go back lower slightly, whereas the dollar yen has been on a strong bounce back and recovery and climbing back into resistance at the 142 already, and which means that the US dollar index has found some recovery and started to bounce, whereas the major pairs have started to retrace lower. And this is a critical week as well, this coming week, with the FOMC rate decision coming up, where they expected to raise rates by another 25 basis points. And as well as key inflation figure that the Fed is looking at, the core PCE price index. Apart from that, the Bank of Japan also is scheduled to have their meeting and decision on Friday. So we'll see if there's any significant tweaks or changes in their policy, which could impact the dollar yen movement. So either if there's any intervention, it could bring the dollar yen down, or if not, then if the dollar still continues on its bullish momentum, then dollar yen could be climbing back up, especially after the FOMC rate decision. Okay, so let's take a look at the last week's fundamental news that drove these price action. Well, the major news drivers for last week was mainly on the CPI with from the UK, as well as Japan as well, which we haven't seen for a while, and jobs for Australia as well, and retail sales for both the US and the UK. But starting off on Tuesday, the RBA did release their meeting minutes, and they did contemplate raising rates, but decided to hold for a month, because the previous month they did increase in a surprise move. So they flipped it around for this last month. So there is still further potential increase towards the end of the year. So depending on their data as well. Now on the US retail sales, it came out lower than expected, which was surprising. So initially the US dollar did drop, and but they managed to bounce back and recover somewhat. While the UK CPI came as a relief with a lower than expected figure after being in the higher 8 area, 8.7. So it did dip below 8 for the first time in a long while. So this dragged the cable and the sterling pairs lower, and this may influence the Bank of England's decision the week after. And surprise, nice surprise for the Australian economy, with more jobs added for the last month, and versus the forecast were almost double that. And on the UK side, for the retail sales, it was very strong. So this helped to push up the cable for a while. Ultimately, it did resume its bearish move. And for Japan, it was still fairly high CPI data and figure. And their expectation is also similar to the rest of the other central banks at a 2% target. And it came out actually higher than the previous month of 3.2, but they did forecast this higher figure. So, but with the Bank of Japan being not taking any major action in their policies, we'll see later on this coming week. So the US dollar took advantage and the yen weakened, and the dollar against yen did continue to drive higher. So this coming week is a critical one with the FOMC, ECB announcing their rate decisions, where they have indicated that they will raise rates another round. There could be another one after that. But with a bit more data to come for the next couple more months until the next meeting in September, FOMC will decide whether they'll still continue on another rate increase after this. Similarly with the ECB. And on Friday, the Bank of Japan does have their meeting schedule, and although they have not made any significant changes, they may tweak some of the yield curve figures, so that could still impact the currency. But we'll see whether they'll make any major changes. Otherwise, they're still losing out against the US dollar. And the key one towards the end of the week, the core PC price index figure, that's the key inflation figure that the Fed is looking at, and they're forecasting a lower figure versus the actual for the previous month, and similar to the CPI, which came in lower, CPI and PPI as well. So hopefully they're looking for a lower increase. So we'll see whether this will materialize or not. Otherwise, it's going to be a lot of volatility. Anyway, all this week there will be lots of volatility, so do be careful. And of course, on Monday, there's all the major economies will report their flash manufacturing and services PMIs to start off the week. All right, so very critical week towards the middle and end of the week. So do trade cautiously. All right, let's move back to the analysis. Let's start with spot gold. It did manage to push into the almost hitting the 55th retracement on the Tuesday already, hitting this previous resistance high, swing high areas, and it did hit the 55th retracement on the Thursday before falling back down, and at the expense of the US dollar. The US dollar did recover over the last second half of the week. So we'll see if there's further retracement to be had, dropping into the 1950 area with the daily 55 EMA, where it started its bounce from, and whether the rate decision from the FOMC will create any shock that will push the precious metal higher, or even on the Friday with the PC price index. So 1950 is a key support for now, or at least an intermediate support. And it has fallen below the 1975 interim resistance. So the 50-fib at 1986 is still major resistance here. Similarly, at right below at the 1900, near the daily 200, is the critical support level for spot gold in the medium term. And let's also take a look on the weekly time frame. It's just a spinning top. It's not very bearish, but with the longer wick on the upper end, there could be further pullback lower and test the next support area. Let's move this 1950 interim support along with the daily 55 there. Okay. Let's compare this with the US dollar index, the DXY, see how much that has recovered. And here's the US dollar index, the DXY, where you can see that over the last 3 days of the week, it has managed to turn back up and recover, getting closer to the 101 level, and after a double bottom. At the start of the week and from the end of the previous week. And did manage to break through the 138 fib extension area after dipping lower below the 162 fib extension. So let's see if it's able to continue its bullish recovery, and it needs to get back up to this swing low. At the 101 near 50. And if we take a look on the weekly time frame, you can see that it has managed to find support from the key weekly 200 EMA. So that has managed to keep it afloat and attempting to continue to see whether this is a piercing line. It's about half of the previous week's candle. So this key support, key resistance now is going to be at the 100 fib. And the interim resistance at the 101, as well as support at the 138 fib extension. And the major support, yes, although it's just above the 99, but we can use the 162 fib extension for major support. All right, so this week there's of course critical news from the US with the FOMC rate decision and the core PCE price index, so all critical fundamental drivers that could either drive the continue to drive the US dollar higher, or could turn it around and continue its bearish move after this breakdown from the triangle. So critical week for the US dollar index. You'll see that some of the other signal providers, they already shown the DXY just crossing over the 101 already. However, from this broker, it's still below that, just closing around the 170. All right, so that's similar to or inversely correlated to the euro. And let's see if this is going to continue or the euro is going to recover. Okay, let's move back to the other pairs. Let's move on to dollar against Japanese yen, where on Friday it made a significant move and hit the resistance zone, almost hitting the 142, and definitely hit the 21 fib retracement. So that's now going to be let's mark this as an interim resistance. Yes, punched through the critical 140 level. So that's going to be interim support now. And bounced from the just below the 138 and the 50 fib area, which we will mark it as a key support now, and move this away. Let's identify the next area of resistance at the 144. And this week is a critical week for the dollar yen and all the yen pairs, with the FOMC meeting and decision where they're expected to increase rates, and this could push the dollar yen even further, since the Bank of Japan has not changed any policies and their interest rate, and still at minus negative interest. But we'll see if they make any policy tweaks on the Friday, which could impact the yen and could help to strengthen the yen. Otherwise, it's going to continue to weaken. And of course, on the US PCE price index, that's going to impact the dollar pairs as well. We'll see if it's going to dip lower as forecast, or whether it's going to surprise and come up higher, which will be a headache for the Federal Reserve for the next round in September. On the weekly time frame, you can see it's a very strong bullish bounce from the 138 and did not engulf the previous week, but it's definitely a piercing line. That could be continuation bullish momentum here. All right, so let's see how much more the yen pairs are going to be driven higher with the recent bullish recovery from the dollar yen. Right, and watch out for the volatility as we move into the midweek and the rate decisions, as well as ECB on the Thursday. So do watch out for the volatility and stay safe. Have a good trading week and cheers for now.